Let's take a look at some information and charts on Terra, Luna. I don't know what to call this thing for BraveNewCoin. So Terra, Luna, Anchor, ecosystem, proof of stake. The bottom line here is no matter what I say for the people who are mega uber turbo bullish on this, it's not going to be enough. And for the people who don't know anything about it, that's what I'm here for. I'm here to give you some baseline knowledge and baseline information, and you can take it from there. So for me personally, Luna Terra is synonymous with stablecoin specific things. They also have airdrops, ICO type stuff. We'll look at all that as well. We'll look at all the metrics we can look at. But with any proof of stake chain, you want to look at validators, the process, who gets paid, how much, what is the interest, what is the staking percentage of the network. This is important for supply demand metrics when you're talking about how much supply is soaked up into the staking component. Can you do more with your proof of stake stuff beyond just staking it? Is it a liquid proof of stake? Do they have DeFi? These are all things we're going to answer in this video as we take a deeper look at Terra, Luna. And I hate this website because you'd have no idea where you're at. But anyway, that is besides the point. So some of these graphics are a few weeks old, but still hold up in trying to explain what Terra does. And in general, we're seeing just more bridging type of chains. The more each individual chain can touch any other chain, the better. At the end of the day, they probably lose individuality. They lose their identity a little bit. You know, if I can do what I do on AVAX or DOT or Solana, what do I care where, right? At the end of the day, unless I'm attached to the community of any of these coins, Terra, whatever, I don't care where I do what I need to do, right? Some people would rather use PancakeSwap, Binance, MetaMask, Coinbase, DEXs, whatever. But we're getting closer and closer to a time when it's going to be hard to pinpoint one chain from another because they're all going to be able to do everything. That's kind of what it comes down to fundamentals, supply, demand of the coin itself, what the coins can do. I've said this with the lending protocols as well. I think the lending protocols could all add a stablecoin component of a comp. Maker already has one. I think all the chains can add a stablecoin component. So things will just continually get messy until we see a contraction of ideas in some way. Maybe Sol disappears because the chain just can't handle it, or DOT disappears because there's too many parachains. I don't know. But a lot of chains look like this in that they can bridge all over the place to anything. And I like this graphic from Block 49 that kind of break down the basics of Luna, what you really need to know. Core protocols Anchor and Mirror. Anchor is lending and borrowing. Mirror is more like SNX, but together this protocol is very similar to Synthetics in my opinion, how it works. And they're adding all sorts of DeFi stuff on top of that. They're adding mobile payments, which is something that people throw at me when I say I don't know anything about this. They say, look at all the numbers on X app, or look at all the numbers in Korea or something, right? I'm just not tuned into that personally, but I know it exists, and you should know it exists if you're thinking about Terra in a serious manner. And then here's where the stablecoin thing kicks in, where you can swap in and out of stablecoins on chain versus having to deal with Tether or USDC or DAI or that sort of thing. So they're kind of keeping everything in-house, which is honestly what all chains should do if they can handle it. Obviously, Bitcoin can't do certain things. Other chains can. ETH can also do everything. These lending and borrowing protocols can also do everything. Everything can be like SNX, right? And at the end of the day, it's going to come down to supply, demand, regulatory stuff, KYC, AML. All that will eventually kick in. And we're still kind of in that process. Most people don't really care about validators or consensus or whatever. It's important to have just some baseline knowledge, because if something goes wrong and you're in these protocols for large amounts of capital, you're going to want to know what needs to be fixed, how many validators to take over the network, that sort of thing. Nobody cares about governance until there's an issue, and then everybody cares about governance. That's just how it is on any coin ever. Ideally, you want validators to be geographically diverse, have diverse interests. You don't want everyone to be a VC or an exchange. Ideally, it's just random people all over the world participating in validation and consensus. And we can look at the validators. Ideally, most chains' validators are public knowledge. They're not hidden behind some anonymity. For proof of stake, I feel like for proof of work, maybe it's for me less of an issue. I can see the miners specifically. I can see their addresses. We can see who they are. We can see to some degree where the nodes are located as well for Bitcoin. So to me, it makes sense to know where the proof of stake components are happening. Staking APR, I think that's after fees. So you have to take into account what are the fees on the validators, what is inflation on the network, and then after both of those things, that's your actual ROI. Right now, USDC is at 9% on comp. So for most people, you're better off just sending some money to comp, right? Unless you are bullish on Luna and you expect price appreciation, which is fine. But just ask the Dash people how that's worked out over the years. You have these old masternode chains with this sunk cost mentality, in my opinion, where they just hold on to this stuff forever, just hoping for something to happen. I don't know. I'm not like firing shots at anybody specifically, but you get into this trap where you're a part of this community. Tezos, another example, and you're just so far behind on the opportunity cost that you just don't realize you can get out at any time and go anywhere else, make your money elsewhere. But anyway, a few VCs in here, generally mixed bag, Galaxy Digital, Huobi, some exchanges. It's not as egregious as EOS, which is the top 21 validators that get paid. Most of those are Asian or exchanges. But this generally looks like a random bunch of Autism Capital. No, I know them from Twitter. Just generally looks like a bunch of different validators. Similar to Tezos, they also have a bonding mechanism that also sucks up supply, sort of a masternode type of component as well. So to me, these guys are closer to Tezos than EOS as far as validators are concerned. I always like to look at when the token launched, how much they raised, where did the tokens go. They didn't really raise that much money in the grand scheme of things. Obviously, 50 million is 50 million, but compared to some of these other chains, they didn't raise too much, and this was in 2018. As far as the distribution goes, I mean, it kind of is what it is at this point. It's been 3 years, but it's important to know when these people are selling or when tokens get unlocked, if you can see that, if that's possible. Sometimes it's listed here, sometimes it's not. But like for Link, for example, to know that the company is selling X million per month is important to know. What you do with that information is up to you. But that's important to know, in my opinion. Here's a bit more on the stablecoin side of things. I'm not going to go into it, but again, if you use it, it's important to sort of know how it works and what to do with it, and how the peg works and what happens when the peg goes wrong. What is the market rate versus the peg, that sort of thing. Everything you're familiar with on any stablecoin, really. Today we got in the US a bunch of stablecoin regulations or calls for regulations of stablecoins as stablecoins increase to over 130 billion in total circulating supply now. Lots of calls for regulation from a systemic risk perspective. Most people in crypto are unfazed on any of that as far as systemic risk goes. I don't think it's a major concern unless Tether or USDC go under. Obviously, it's important to have that stability in a stablecoin, the underlying peg. But Terra Luna is part of that conversation, even on the ancillary or tertiary, quaternary thing, because it's a stablecoin. It has stablecoin activity. So if you're looking at fundamentals of, what is this supply? How does that mechanism work? And the big thing is, what is the supply of the stablecoin relative to price over time? Does the supply of UST correlate with bullishness in price? Is there some sort of burning mechanism that's correlative, let's say? It looks to be as though there is. So for instance, if this were to start contract in the total circulating supply, I would get more concerned for the price of Luna, Terra. I always confuse the two. Whatever the token name is. If the stablecoin contracts, the token should also contract, is my argument here. Right now, it looks completely fine. They also have other stablecoin stuff as well. But ultimately, the US dollar denominated stablecoins so far have been the most important. We can look at the ecosystem as a whole. They have a bunch of other different protocols. Mirror, Anchor, I sort of already talked about. And you can go down this list. I'm not too familiar with most of these, but they do have airdrop components as well. Anchor had theirs, Pylon, Mirror, Valkyrie, Loop, and a few others. I don't think any of this is enough to move the needle, but it may be enough to bring people to the table to get them attracted to the idea of using this chain, because free money, right? That's the mentality. Incentivize people to start using the chain. This is TerraSwap, their DeFi, DEX, AMM, whatever you want to call it, equivalent. Similar to anything else, right? PancakeSwap, Uni, Sushi, whatever. You can see all the mirror pairs here as well. So they got a lot going on. They're sort of a mishmash combination of different protocols and ideas from all over the place. Volume is holding at around 100 million on average, it looks like. TVL or liquidity basically at all-time highs, effective all-time highs. And then if we look at TVL a slightly different way on DeFi Llama across all these protocols, also at effective all-time highs. So no risk of any collapse so far in that regard. I don't think that's going to be enough to move the needle for token price, but it's still generally bullish for any chain. This is also from end of September, but again, we can look at all these projects. They all do relatively similar stuff. So how is any one of these going to stand out in the crowd? Is ETH's moat big enough? Is Binance community die hard enough? Are their fees low enough, right? Ultimately, I think that's what it comes down to. If the on-chain fees are incredibly low enough for your average Joe to participate, then that's going to attract more people individually. Is it going to attract more capital? I'm not so sure. The ETH moat is massive. MetaMask is a powerhouse. Interoperability is massive. I don't know if we're seeing that or have seen that just yet for everything else. Ultimately, though, the real dream is to have one wallet connect to everything, make a trade, make whatever you want to do happen through one wallet. And that way you're not even paying attention to which chain it is. You just look at the APY or whatever, and you go from there, which is another reason why these chains are eventually going to have a hard time sticking out in a crowd, I think. But that's probably a long ways away. Terra also has NFTs I mentioned as well. This is an older infographic, so I'm sure it's changed slightly. But to me, everybody's doing the same thing, which is fine. Just knowing that it exists, I guess if you're interested in NFTs, it's available for you to discover. Flipping gears to technicals for Luna, this is the cloud on the daily. It's not going to win any awards for being super exciting since mid-August, but it has stayed bullish on trend, has stayed above the cloud. It has negated the potential diamond top breakdown here. If this was a true reversal, you would have seen this. Instead of breaking up, it would have broken down. It would have been below the cloud, below the Kijun. So on trend, it's fine. It's just momentumless still sitting here. I don't think it's super bullish, but it's not bearish, right? Like there's nothing really to comment on here until something happens. You could argue ascending triangle, I guess, with a bullish bias. But if this acts bullish, because it's in a bullish trend, which it should, so the expectation is 60 to 70 as far as the next leg up. And you could get the current consolidation area by measuring this to this. It probably matches where we're at currently. On the 15 to 200, it's held above the 50 since July, which is pretty impressive. Again, not winning any awards for momentum, but it has continued to creep higher and higher and higher. Generally in these consolidations, how this works is eventually, again, you hit a tipping point where bulls take over, supply dries up, and it goes to the next level, right? It goes to 65 or 70, 75, whatever the level is there. RSI's flat here. So I don't hate this for higher highs. I think there's better stuff to trade right now. For instance, against BTC, this looks more toppy to me. The trend is still bullish. It can cancel out this potential reversal pattern, head and shoulders, multi-shouldered, multi-headed, head and shoulders, whatever you want to think of this as. It can cancel this out, but for me, when I see stuff like this, I don't want to be on the fence about being bullish or bearish. I see anything that looks as ugly as this, or as monstrous as this does, and I just think, nah, right? I'd rather just hold BTC or trade something else that I think is going to move sooner. This can get canceled out if it breaks above whatever this high is, right? RSI still looks fine, still way above the 200, but if this breaks down below 55K sats, that probably means that BTC is at 75 to 85K at that point. So against BTC, it doesn't look as strong. Against ETH, it's just, it shouldn't be a question of, is this bullish, is this bearish? If you're going to switch into an alt versus ETH, an alt versus BTC, it should just be boom, instantly I know this is bullish, right? I do not get that feeling here at all. It's sideways consolidation. Maybe you could argue multi-month cup and handle with a breakout potential above 0.12, but again, momentumless sideways chop. It's not going to win any awards for being exciting. Not bearish, but unlikely at the current point in time to outperform ETH or BTC. And you could do the same analysis against Sol, against whatever else is on this list, AVAX, and just do that experiment yourself. Just make these pairs. You can do it on TradingView. You can just type in Luna USD divided by ETH USD or AVAX USD and just look, right? if you want to be a rotator and make that rotation trade, these are the type of things you have to do to min-max the potential here. And it should always be instantly, is it bullish, is it bearish? You know, I see this, I'm like, okay, this looks more bearish than bullish to me. That's not for me. I see this, there's no momentum here. That's not for me, you know? It should just be that quick. So there may be a time later in Q4 where this thing starts to take off. I just think currently it's quite flat and sideways. Lastly, let me just mention the EPTC fund and DeFi portfolio. I trade for Technique Capital and I'm not financing, non-custodial portfolio management tool where you can send ETH or USD or just watch what I'm doing. You can see everything, including AUM performance, allocation. You can see all of the vaults I'm in here on Yearn, Comp, and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.